Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with the one and only Bob Iacchino, who is not here at the moment. It's a Friday afternoon. I'm thinking we're going to try to get him on next week, before the Fed announcement, and then probably after it. So we'll try to get his what he thinks going into the Fed announcement, and then what he thinks after, as long as I don't see, any comments saying we don't want Bob around. So let's see. By the way, if you're new here, especially after this tumultuous week, please do consider subscribing. Wow, that's moving in very slow motion. Is my stream going okay? Is my streaming going okay? Because it looks like it's a little like a little slow. Just wondering. Just wondering. Let's see. Adam, welcome. Chop, chop, chop. I don't know if is that chop, chop. Today wasn't really choppy. But people could get chopped up from the long side. I have to say that. Dave, welcome, welcome, welcome. A fine hello, and a fine hello to you and everybody else. Rich thinks the crash is coming. That would be interesting. Would be interesting. Based on the fact that even with the negative gamma expiration today, we sold off. I mean, we sold below the morning's lows. That was a little surprising to me, but 2001 repeating in two. Yes, I do agree with that. We're starting to see the Nasdaq just leading stuff down and other stuff just rolling over. Again, I'm still going to be watching for a slight bounce, but bounces are to be sold. Hello, Shashi. Kalani, again, thank you for the super chat. Kalani here every day with the super chats. This is you. I wish you need like a sticker. Like I need to make something. I need to make something for Kalani. Like a super chat badge for specifically for him. We want Bob. Let's get rid of Mike. Let's just have Bob around. Hello, hello, hello again, Kalani. The Bears won today. And by Bears, you don't mean the Chicago Bears because they don't win anything. You just mean the market bears. And the market bears were in control today. That's Rich. Optimistic outlook. The crash is coming. We're all doomed. Maybe Rich Beast, we could call the Eeyore Beast. I don't necessarily disagree that we could see. Crash is harsh because a crash is we've had a steady unwinding. Let's just peek in at the stuff today, like the NASDAQ. There's the weekly chart. And to just put it in perspective, I mean, here's again, that's essentially your yearly view. Here's the 1 month. We don't want the 1 minute. That's a big old red monthly bar so far. But in the scheme of things, if you take it into the look at this run up versus this. I wonder what that is. Since the lows I'm just curious about something. So just humor me, it's a Friday. Just since the lows in '09. All right, we're back to black below the 12.5% level, but it's just a minor flesh wound on the market still. I mean, it looks bad from this perspective and brutally oversold. You see the selling this afternoon. Why are we looking at the Nasdaq? Because a lot of Tesla and a lot of these high flyer tech stocks, which we throw Tesla in, they're going to follow this kind of price action. And I thought the lows were in this morning, and then we rolled over. I thought we were going to just with a negative gamma, and I'm going to look to probably put up a video. Got asked a question on Discord about what the negative gamma was today with the expiration. So I will look to go, and then I might do a Mike's Crazy Classroom, see if I can record that tomorrow. And then we could have another discussion. Remember the market overview Sunday afternoon at 3 p.m. Central Time because I am still stuck in Chicago where it is cold. All right, so that's enough about me. Thank you, everyone, for joining. Let's just take a look at the bigger picture. End of week with Tesla, big red selling week. Not yet an oversold, though. Still now closing below the weekly rotation zone, so that takes it to neutral. which finally it's in neutral. It's still in this massive consolidation phase. The key line in the sand is still the low from the week of December 20th. You start getting close below there, that triggers a massive double top pattern. Even this is still considered just a one top on the massive weekly, and then we will really start to go into bearish mode. The gap fill, and I'm actually surprised with the amount of selling today, given Tesla's now finally getting in near that oversold zone, which it's hard for Tesla to hit. You see here, it is extremely hard. I mean, this is besides this little lows from December 20th, this is in the major oversold. Remember, earnings next Wednesday and the Fed Wednesday. So Wednesday is the big day. You see here nearly a full gap fill, not quite. The full gap fill would have been down to 938.53 and the low was to 940.50. But the daily's been in bearish mode, so even with the weekly neutral, it's essentially sell rallies at this point. Even earnings rallies get into the sell zone. All right, so we got the positive news out of the way. Do we have any, what's going on for next week now? Since we do have the earnings, let's just see. We had the key little areas. Let me get to one shorter term chart. So we had 943.58 and then 930.50, and you see here just holding there and dipping below 943.58 on the close. If a decline does continue, besides that little gap fill that's so close, the next key little areas are 935.06, 929.62, and then 923. But remember, a lot of people will be positioned then. If we do break below that 923, 886 is very key. Let's see. Let's see. What do we have here? Kratos, Tesla to zero. Wow, you're even worse than me. Well, if I said that, I'd be in trouble here. The amount of stuff that would light up the email account. Chicago Bears don't win, coming from a Bears fan. We'll see what they do with the open GM and head coach position. A 50%. Oh, it's only a 50% crash. Are you saying a 50% crash from from what levels? Just give me your levels, Rich. I'm curious. Kalani, just teach me how to leave money on the table feeling. Well, just teach me how. All right, you're going to need a bigger super chat for that. No, just kidding. Again, that's just a state. That's the psychological state. I mean, unless you can buy every low and sell every high, or conversely sell short every high and buy every low, you're theoretically always leaving money on the table. You're never going to do that, though. And it wasn't your money. It's just what the market, it's just looking at the extreme tick. So there's always that aspect. Your job as a trader is to take the chunk out of the middle, either from the long or the short side, and stop worrying about everything else. Because there is no perfection in trading. And there is no buying every low and selling every high. So there's always, theoretically, you're always leaving something on the table, but that's psychologically disempowering. Hello, Wavy. So you just gotta, your job is to, take that chunk out. And at the end of the day, trading is not about buying lows and selling highs. It's about making profits. So that should be your gauge. And it's not even daily profits. The people who have to make 1,000 or 500 a day, that's not realistic, because there are some days that there is to do nothing. There are some days where if you stopped at, let's say your goal was 1,000 a day, and then you stopped when you hit 1,000, well, you could have maybe made 4,000 or 5,000 that day because it was an amazing trend day. Why stop? And then there's days where you should just literally sit on your hands and do nothing. So I look at things in quarterly results also. How about that 30-second 40 point up, 40 point down, fazoing to clear out all the buy and sell stops? We had some, again, this option expiration, you tend to get those crazy moves, and you get repositioning stuff. It was just a very interesting option expiration, especially with that negative gamma, which means just a little thing. So if I'm a dealer or a market maker and I have negative gamma, instead of it becoming positive feedback loop, like when we talk about gamma squeezes and everything, where as like the market moves up, I'm forced to hedge more and more, getting more and more short to offset the positive gamma. This, you actually have the inverse into negative when you have negative gamma expirations. What happens is you're actually unwinding hedges as the market rallies or sells. You're unwinding the hedges, so it creates choppier conditions because it's actually a negative feedback loop. We'll get it'll be interesting to see the size of the bounce, not just in Tesla, but in the broad market. That's really going to be what's going to be interesting. Do you think they will have a beat for earnings report? Yeah. I think they will have a beat period, and I think this might be the last beat for a while. Tesla's still holding up. Is more evidence Tesla is no Netflix. I'm not going to comment on that. Tesla at 800. I could see that easily happening. From all 50%. Are you? Yeah, 50. Oh, so you think from all-time highs, like Rich thinks 50% correction from the all-time highs. I could actually see that happening, not in the next couple weeks, not in the next couple weeks, but I could see that potentially happening this year. I do not disagree with you, Rich. That is definitely bigger correction on a major correction on my radar screen. It'll be interesting though to see what the Fed does, because remember, the Fed. After 2008 was the time the Fed really started stepping in to, all right, we're gonna try to rescue the markets at all costs, and that's continued since they started stepping in. So we have yet to have the Fed really sort of steer clear of the markets, shall we say. Wavy is talking to Kalani also about the leaving money on the table. I have that problem now. I think of it like this. Imagine those who are losing money. That's like when you have to give that speech in front of a lot of people, you imagine the people naked. So Wavy imagines the people losing money. I'm happy with even dollar profits and a trend for me. Just make sure you keep your reward to risk right. Because again, you don't just want to keep grabbing up dollars and then when you have a losing trade, losing tens of dollars. That's overall a not great strategy. So it's always reward to risk and your win probabilities. So you have your probabilities and reward to risk, and they all play out in trade expectancy. And I'll probably have to do something on trade expectancy too. Dan Jett, welcome. Worth adding that every time we win, someone else has lost. It's the nature of trading. Well, that's especially true in futures because futures are a zero-sum game. I think Apple will miss. That will be interesting. I could actually potentially see that. I'm really excited for post earnings. I'm gonna be really excited once this next Tesla earnings are out of the way. It'll free up some more and more trading. 34,000 critical level on the Dow, bounced off it a half dozen times. Yes, let's just peek in since we can touch on this. It's a Friday. It's rule-free Friday, I guess. Oh, look at that. Look at that harmonic level to close out the day. 34 is right here. So we have bounce, 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 dip below, and then recovery, bounce. Yeah, 34 is getting to the critical level. My critical level is about 33,725, slightly below there. That's actually a significant level, and that's my key line in the sand for the Dow. But this is turning ugly. So what's really going to be key is to watch for where the next bounce takes us. Let me just finish the Tesla analysis. and then we can look at some other stuff. So by the way, if anybody's looking for aggressive plays on Monday, an hourly close above 961.98, so 962 would be a very aggressive entry, especially once the 1 hour rotation zone's out of the way. So that's without there being an earlier little 5 minute pattern or something with a gap play. That's the first bullish play in case anybody's wondering why is it so aggressive. Here's your hourly rotation zone in bearish mode. There's your 4 hour rotation zone. So even on a play up in here, even back to the 995 to 1,000, it could potentially roll over. And here's your daily. So even if it rallies up to the daily rotation zone at 10, 13, 10, 10, it's just setting up for a potential rollover. So everything, so when I say it's aggressive, this is not one you just buy and then walk away and go on a vacation and just say, when I come back, Tesla will be at 1,200. No. This is, if you're playing this, the stop would have to go below this 940.50 area, and this would be something as it starts moving into the rotation zone, and especially gets to the other side, if it continues to rally. First key area would be moving up a stop around 983, and then watch the other side of the rotation zone, move up a stop, take some off. Remember, I talked recently about if you're going to get in longs at these key areas, besides moving up a stop, lock in some profits and then get your stop to break even. So if it rolls back over, or when it rolls back over with these rotation zones, and unless you've taken it all off, if it then stops you out at break even for half your position or whatever you left on, fine. You took a shot. And if it rolls over before you expect it, you're not turning a partial position into a losing position. Just be very careful in these markets, especially when you have the macros still negative. Now, we could get a nice little, at least pause or a little recovery rally, at least into the Fed meeting. That's what I'll be watching for. But remember also, things can move to get out of an overbought or oversold condition. So this would be oversold. Things don't have to rally that much. Remember, they can move sideways. There are two kinds of corrections. Now, a sideways correction is a slight bit of a rally, but it's not like a major rally back to the rotation zone. So this could work. This could just rally slightly and then let the rotation zones come back down and then trigger another wave of selling. Keep that in mind. That's why I'm really interested to see Monday, Tuesday, what the broad market and what Tesla does, because that will sort of say the overall weakness or potential bottoming, short-term bottoming strength in the market by what it does going into the Fed meeting and with Tesla into earnings on Wednesday afternoon. So, I see 800s on the table for sure. Well, yeah, again, when we remember, if we do, even after earnings, if we do, let's say we bounce on earnings again, hypothetical, let me take off some of these other lines. This chart is driving me crazy. We'll put them back on if Tesla does something else, but let me clear off this chart. We can update key levels. All right. So, I have to even take off some more lines. There we go. Again, if we get below this 886 on a weekly closing basis, you could even easily see 725 area. So keep that in mind, especially since we've already tested this key resistance becoming support right here. You start rolling below that. And everybody who's bought in here then will be essentially trapped who bought right against this key support from before, and then you could get a further flush out move to the downside. I mean, we're starting to weaken all the levels of support in Tesla. Wells Fargo raised SIG price target A clean chart is equivalent to a clean office, regular 9 to 5, and I will clean up the chart a little more. I don't want to take some of these levels off. We can leave everything at 1,000 and below. How about that? If you get above 1,000, I can add some levels back. Oh, thank you, Amit. Catch the recap. We'll take a look at you and everything. Spot on, Wavy. With sometimes I have to leave up some levels. I do so much stuff intraday with this stuff. Let's just get the bigger levels on here. Again, these levels aren't, so we have 922. Okay, so I went over the aggressive buys. Remember, there's not much for me to do. I mean, I'll start watching it above this 962 level. But again, everything's just, for me, is very aggressive short-term trading at this point, watching for a slight bounce. The 4-hour rotation zone is 993. And we've already gone over the key lower levels. We break below 923. Let's see that we have next level. Let me just take a look here. Next level for me would be about 914, 913, 914 area. Then I'm targeting 886. Below 886, you have 877. These aren't just for more tomorrow or next week. And then my major level is about 843. Before we get into the really lower price targets with the potential massive double top. So somebody said, look at Netflix. Yeah, Netflix with the subscriber miss. That's what it got hammered on. But even with Netflix, I talked about this in market overview too. It's just, even with rallies, that sell the rallies at this point. You know, anything to the long side would just be a scalping nature only for a partial gap fill, because your key resistance up here 466, and before that about 420. And we can cover that more on the market overview on Sunday. But you're starting to see more and more stuff just hammered, especially with the massive distribution top being put in. And we have yet to trigger major sell signals. Keep that in mind. I'm still watching for some major sell signals to get triggered in the broad market that have not yet. And once we get some major sell signals based off some other systems I follow, and these are major sell systems, I will let people know. And that's what you get into this, especially this option expiration with a volatile mess. Let's see. And by the way, with this option expiration, you got a bunch of the negative gamma out of the way. So that's another thing also. You now have taken the sort of the feedback loop, the negative dampening effect. I don't know if everybody knows what there's positive feedback loops, like do people know the Tacoma Narrows Bridge, you know, with that oscillation, or you know how just the winds start the oscillation going, and then the bridge is the famous, you've seen the videos of it, but then it pretty much ripped itself apart. That was a positive feedback loop. A negative feedback loop is like your suspension on the car, you know, with your struts and shock absorbers and springs, where you hit the big pothole. It just doesn't stop the oscillation. It dampens the oscillation, and the waves get smaller and smaller. So negative gamma is like a negative feedback loop, because it dampens rallies and it dampens dips. A positive feedback loop is like when we get like the Tacoma Narrows Bridge, a resonant frequency that just keeps ramping the wave pattern up and up and up until things just essentially destroy themselves. So we're out of that negative gamma, negative feedback loop. So what's interesting is we'll have to see the overall positioning for the major options of the futures for starting next week, but they could get into a positive feedback loop again, which means dealers have to, for example, hedge themselves more and more on rallies, which means they actually have to buy into rallies to get back to delta neutral, and also sell into declines to get delta neutral. So we're going to have to take a look at that. That's some advanced stuff. Why I'm bringing that up is because we had a negative gamma expiration day today. So once your negative gamma expiration, it sort of puts some dampers on some of these moves. We've had some downward moves, but again, on any rallies, we're dampened. So we'll have to see once that's out of the way how the broad market reacts. I'm bumping that level down to 995, by the way. What would be major sell signals for you? It's stuff that I can't. It's proprietary stuff. It's not even my stuff. It's just proprietary stuff that I have access to. So I can't teach that because I would be voiding proprietary information. But I can say when there's major buy or sell signals. That I can say. Save it for the market recap ensemble. Why don't we hit the target on the clear? But didn't we hit the clear? Yes. I'll just take a look at that because it's helpful to see what we do for people in the markets. Here's that. Well, on the futures, we hit the first target of the clear path. The full target on the futures is 43.27. If you're looking at the spiders, we hit. No, we still have. Remember, we still have this gap left behind. And the full target on the spider clear path would be to 435 area. So that's still got some downside room, and you have this gap still behind there. NASDAQ hit and went through the clear path. So NASDAQ, the clear path going into today was 14,592, and we just sliced through there nearly down to the next major harmonic level, which is very, very bearish. Again, expecting a bounce. And the Dow, we had an advanced clear path, and the target for the Dow advanced clear path is this open right there. So we could easily see that Sunday night going into Monday morning and then get a nice little bounce. But all these key levels that were support are resistance. So why does today mark the end of negative gamma? Because you had it was options expiration, so you had all those options expire. So the dealers and major market makers that had the overall negative gamma in the futures and indices, because you're going to have options on the indices, that expired with today. And so we essentially, now we have to look at February's major option positions. And I don't have the analysis fully on that. But today you had the gamma roll off. I think I posted that in Discord. I think I did that today with the overall. People do a lot of great work on there. So with positive and let's see. So this was from, this is from last gamma exposure. This was the 20th, so this was last night. But this essentially, so your gamma was negative. The gamma flip was around 46.65. Okay, so this is when you get the positive feedback loop. This is the negative feedback loop. So, and you can see we were in the negative feedback loop all day. So it was counteractive to the rallies and declines. Yes, it was. Today was, well, you had, the monthly expiration date and anything for the last week. Yes, it was a monthly expiration date, and those are the highest volume options, the monthlies. Yeah, the VIX, I'm starting to watch for a potential. We're getting into that toppy area right here on the VIX. So I will be keeping a close eye on that on Monday morning. Even if we get a final push, higher, we're getting into the major, and VIX has been going down and down, but I start to really start watching stuff above this 29 area. This 29 area gets very interesting in the VIX to start watching for potential reversals. Is my live stream still going? Let's see. Let's see. Looks like it is. All right. Sorry, I just got an error on my computer. I was making sure. I just started watching for the top anywhere around here. Okay, just making sure. So that's your macro pattern to a lot of stuff. Now, also, I'll get into a couple things here. Just I think people are interesting. If you want to drop off, you can drop off now because we're getting into some other stuff just that I'll put on market overview too. But some handy things to watch if you have it could be on your charting platform. If you're on TradingView, by the way, if you want to get a free trial TradingView, link in the description below. This is the percentage of stocks above the VWAP. We finally got a little reversal today. So I'm seeing if this starts holding. I mean, we got a bigger reversal, but it's still getting net positive on the close. That's your percentage U.S. stocks above the percentage NASDAQ above the VWAP. I'm starting to watch for a potential bottoming move. Other things, percentage of stocks above a 5-day average. You can see this very low. This is very key. This is another one you can watch for. You see here, this is reversal territory. This is incredibly bearish. When you have down here, we're about 8%, 8% of stocks above their 5-day moving average for the broad market. Very, very bearish, but this is a counter indicator. So this is another reason I'm starting to watch for at least a short-term bottom. And that symbol, if you're on TradingView, is MMFD. Again, remind me so you can see this percentage of stocks above their 20-day average. We're in bottoming territory. You can see how it took a little bit last time at the end of November, beginning of December when we were down here, but then we got the rally. We're getting into this area again. Does this mean we have to rally on Monday? No, but we're getting into this key area where it's getting ridiculously oversold. Too many things are getting way too oversold, and you can start to watch for that bounce. Here's your percentage of above the 50-day. Okay, now it can go. We can even get into major. This is the COVID sell-off before the Fed stepped in. So yes, things can get a lot worse. But recently, this has been a key area for at least a short-term bounce. I'm not talking, when I'm looking at all these, I'm not talking about some major monthly. This is a major monthly low or a major yearly low. I'm watching for a short-term bounce. And here's your percentage of stocks above the 200. And you can also see, remember I talked about breadth deteriorating, market breadth deteriorating? You can see it here. Look, and even on these bounces, look to see how they're lower lows, lower highs. So this is your overall market breadth. And you can see that even on bounces, it's getting weaker and weaker. So longer term, do we have ways to go? Yeah. Longer term, we can make this market can keep getting sold, especially on rallies. That's why I'm in sell the rallies mode. You can see here that major bottom, December major bottom. Remember that huge bounce in December, right? Like the final sell-off was Christmas Eve, and then we had the rip your face off rally. That was this. You see, and this was the COVID stuff. So you can see, and this was we had some bottoming action in January of 16, but you can easily see how longer term we have a lot more area to fall. Sorry if this is gone beyond the scope of Tesla. I just thought some of this might be interesting to help people view things because Tesla's going to trade still with its valuations, and if the broad markets continue to sell off, Tesla, no matter what you think of it, can keep going lower. Great, Dave. Have a great weekend. You two got to roll. Let's look at the stocks. They're all those in this SPY. This is looking at a broad market. This is looking at a ton of stocks. I think it's all the U.S. stocks, or all the U.S. stocks that have a certain volume. The market can also remain overbought longer than you can remain solvent. Oversold's more likely, though, for people because more people are long only. But the market can remain irrational longer than you can remain solvent. Let's go with that. I think isn't that closer to the official quote? That, things can go overbought or oversold or into a position that is you can keep looking for the bounce. I'm looking again for a potential short-term bounce and then another rollover. And you watch this one, this MMTH. Pay close attention to that. If we bounce, make a lower high, and then start rolling over again, I'm watching for another substantial leg down in the markets. Let's see. Hold up. Really, the only thing that makes sense is to strive for greater collective enlightenment. Well, there you go. Thank you, Sean. I'm just trying to share more and more of little stuff and keep to reward the people who review on the regular basis, because you'll get little tidbits of stuff. Even if you don't look at our market overview, which you probably should, at least for the next few months, getting into this critical information, you can plot this stuff on your own and start to watch things. What else? What else do I watch? Ratios. Just here's your value to growth. By the way, I've talked about this in market overview. When it's going down, this is value. This is growth getting beat up and money shifting more to value. You can see here, clear trend is down still. So even on bounces, even if this bounces and money rushes back into growth to think it bottoms in, it's again after a bounce in growth, you sell growth and you again shift to more value oriented stocks. And these are just two different ratios given different ETFs, but you can see it in both of them. And it just broke on this one, the key level of support. So on anything, I'll be watching this to return, and this is a ratio to about 50% and then a potential rollover again. That's why longer term, I am not super bullish on the market besides short-term bounces to get sold into. With that, yeah, market was overbought for longer than a year. It's been overbought for even if you go for like most of the last 10 years, it's been overbought with little minor drawdowns. We can be sold for a lot longer. Yep. Poor Kathy. Thanks, Wavy. Let's finish this up. Let's just take a look at ARC to finish this up. Here, yeah, poor Kathy. Oh, Kathy. Even on this, do not go rushing into ARC. It's just going to be a bounce and then a rollover again. But look at this candle. This is brutal. Here's ARC on a weekly. Oh, below the 200 now. It's back to where it was in the end of June of 20. So everybody who essentially has been in this since the end, this is a year and a half, right? Yeah, year and a half. So everybody who's invested in the last year and a half is essentially underwater at this point. That is just brutal, below the 62.5%. So again, I'm watching this thing, and she's going to have to consolidate these funds. But I'm watching for it to return easily into the 40s. Don't worry, it's freezing here in Toronto too. Well, misery loves company, doesn't it? I don't want it to be freezing at all. Kathy licking wounds. Again, we'll get a slight little bounce, but bounces an ARC. I don't believe she said value stocks. Did you guys see that? Value stocks are over. What'd she say exactly? Value stocks are in a bubble or something? Value stocks are in a bubble or something else. She is insane. I mean, I'm not there to pick on her. I mean, she's made a ton of management fees, even with crappy performance. Besides this run up, crappy performance overall. Because look, I mean, even in this, it didn't do much. And then she just ran up to the Fed induced market bubble, and now it's just deflating. Here's your cryptos. Again, I told you I'm bearish longer term on cryptos. I'm watching for Tether to blow sometime this year. Uh, Key resistance now with this sell off, key resistance is now right around 39,000. So even a rally. My major line in the sand is 31,006. We break below that. I talked about, I'm thinking easily at some point this year, Bitcoin hits 20,000 easily. And it'll happen sooner or later if Tether blows. I should say when Tether blows. By the way, Ethereum, which hit our double targets, we are into a weekly clear path. Now, this doesn't have to happen all of a sudden, but the full target for this is now 1900 on Ethereum. So these, again, bounces are to be sold. And there's no long-term bottoming pattern in either of these. You can see Ethereum back to the rotation zone on the daily and then just brutalized. And Ethereum's trade, and all these cryptos are trading, they're not trading like a hedge like gold or anything else. They're just trading like a deflating, overvalued tech stock. You can see even Bitcoin here, clear path move. Next target, we're almost there, about 35.5, and then I'm watching for 31, this 31.7, 31.8. And Russia banned crypto, a lot will happen. Well, again, crypto to me is a, once we get a lot of the stable coin garbage out of the way, and once we get, there's so much riffraff and Ponzi stuff and unbacked stuff and wash trading in the crypto markets. Once we really get that out of the way and get this crap out, like some of the stable coins, which are not backed properly and just you know, we need to wash that out. I love some of the technology behind crypto, but it turned into not only the wild west of trading, the wild dishonest west of trading. We need to get all that flushed out completely, and it'll still be present to some extent, but not the extent it turned into over the last couple of years. That's what I'm waiting for longer term. It's why I've been doing less and less crypto videos, because I'm trying to just let this stuff unwind instead of get people sucked into it. All right, I think that's a great way. Yeah. NFTs were the final blow. Now everyone is crypto bro. Don't even get me. I had a conversation on NFTs the other day. You know, that's just NFTs. Oh, that was, again, just horrible, horrible stuff. You know, it's, I sent this out. Let's see. Hold on. Here, this was a text I sent somebody yesterday. And we'll end it on this. I don't think I can make it bigger. I could probably make it bigger if I open it with preview. Hold on one second. Hold on one second. I love this. I saw this last night and I had to text it to a couple people. Here you go. I don't know if anybody else saw this. They're not appropriate for kids. So that's the final word. That's where we leave it. And with that, I shall talk to everyone on Sunday afternoon. Please consider joining me. If you want some more of this, we can answer questions. We can look at stuff. We can prepare ourselves for an interesting week next week. We can go through more ratios. I hope, again, people enjoy this content and it's helping at least expose yourself to some stuff you might not have looked at before. Sorry, it went beyond Tesla, the scope of Tesla, for people who just wanted that. But hopefully you learned something, especially in these challenging market conditions. And with that, I will talk to everyone on Sunday. Have a great Saturday. Take some time off from your computer and where you step away and don't look at the markets, and we can get back at it Sunday afternoon. Bye for now.